Welcome to today breaking news. Here's the highlight of the day. Canadian inflation expectation bolster case for supersize rate hike. Ottawa July 4 consumer inflation expectation shares in Canada hitting fresh highs in the short term and up significantly over the long term. A Bank of Canada survey shows Monday bolstering calls for very rare 75 basis point rate increase. Consumers' expectations for inflation have risen, alongside concerns about prices for food, gas, and rent. The central bank said in a second quarter survey on consumer expectation, generally people see inflation as being more pervasive now. In a separate survey, the bank found businesses expect high inflation for longer, with firms eyeing survey request wage increases over the next 12 months and many planning to pass rising costs on to consumers. The surveys both reinforced calls for 75 BP rate increase at the Bank of Canada next decision on July 13. That would be the largest hike since August 1998, when the bank lifted rates by 100 BP to defend. In particular, long-term consumer inflation expectation increased dramatically, said Andrew Gratham, senior economist at CIBC Capital Markets, in a note, adding that across-the-board jumps were not good news for the central bank. What central banks stress is a situation in which price increases become self-fulfilling. Expectation for higher prices cause people to raise wage demands and accelerate purchases, driving further price increases. In its business outlook survey, the bank found firms see inflation above 3% on average over the next 2 years, with nearly a quarter expecting price increases well above the 2% target for the 3 years or more. The Canadian dollar was trading 0.1% lower at 1.289 to the greenback of 77.85 US cents. Money markets are betting the policy rate will hit 3.25%. Thank you for subscribing our channel. I see you in the next newsletter.